Hey everyone, it's Pete Carmasino here at Chaikin Analytics. This is our weekly video here. We kind of do a stock of the day, one that's kind of in the news, and one of the big names today is JPMorgan having topped estimates just this morning, really kicking off quarterly earnings reports that are starting to roll out. A lot of banks reported today, but JPMorgan was really the highlight. They posted second quarter profit and revenue that topped analyst expectations. As investment banking fees were up about, 50 some odd percent, which is pretty amazing. And that's from a year earlier. So obviously, pretty incredible. But even revenue rose over 20% to almost $51 billion. So these are big numbers. And it would have been nice to know this ahead of time. But, if you're using the Chaikin system, you would have known, I would think, all the way back in November. And I'm going to show you why here on the chart. Now, obviously, we rate fundamentals. We also follow technicals extremely closely. We try to marry both together on our charts. And I think you're going to see the powerful combination in play on JPMorgan when I show you the chart right now. Okay, as I said, back here in the November timeframe, when we really got the sniff of interest rates might not be going any higher, or at least pausing. And then obviously that led to a potential cut. Now, that's actually coming to fruition now because we're starting to see inflation come in a little bit, also unemployment rise, and certainly banks would have started to benefit from that. But no one waited around to see if that was going to happen, especially not in JPMorgan. And this is what I'm trying to say to you. We have the fundamental characteristics already built into our power gauge. And as things start to progress on a technical level, right here, right above this long-term trend that we use, right around November 14th or so, price maybe around 150, we'll call it, right? Maybe a little slightly less. That's where we got the sort of validation that things were going to be better in JPMorgan going forward. Now, it's moved, higher and lower, and it's had its fits and starts, and obviously even sold off here a little bit. But what happened? I want to show you something right here. What happened is the relative strength versus the S&P never broke down. The rating changes only because the price sort of triggers an alert and kind of says, hey, look, we've got a break of the trend line. However, it never changed the rating, and I'm going to show you why. You see that little yellow box down there? It's got a green line on top of it there on the week of April 8th on that Friday. That means it's still a bullish rated stock, but the price closed below its long-term trend. Now, when that reversed, the rating went right back to bullish. It did it again here, a little relative strength breakdown, but obviously it moved higher into earnings and traded almost as high as, actually did trade to 210 or so. So what a big move from about 148 to 210 in less than a year. That's pretty interesting for a giant bank like JPMorgan, moving almost like a tech stock here. But we saw it early back in the middle of November. And before I cut off today's video or end it today, what I want to do is I want to show you something. What did I say? A topped analyst expectations. Well, in our power gauge, we look at what experts are kind of thinking about it. We have our own metrics. We don't share them. Obviously, it's proprietary. However, if you see the analyst rating trend here was a little behind the curve, so to speak, even though estimate trends were up and there was very little short interest, the way we measure it, of course, and insider activity was really kind of, I would think, not really an issue or a problem here on a giant stock like JPMorgan. But that analyst rating trend told me one thing, and it happens a lot, that analysts were behind, all right? And our power gauge sniffed that out way before anybody else on Wall Street. All right, folks, there you have it. That was really the kind of take and what we were looking and watching on JPMorgan now since November of last year. It's obviously been up, but it had a couple of false move and breakouts and pullbacks, but it continued. And that's why when marrying both fundamentals, which we still were rating this stock bullish along the way, even though it pulled back slightly, that helped us kind of understand and increase our confidence that this stock could continue higher. Once it moved above the long-term trend again, which was roughly around that April timeframe, that's when it was another time to maybe enter the stock or even add to a position. And that's what we're doing here over at Chaikin Analytics. All right, we'll see you here next week on the video series. Take care. Have a great weekend.